want to get into more complex, especially order flow analysis, you can do so through ExoCharts, right? That's a paid service. You do not need to have it. But maybe if your system requires it in future and you've made money from trading and you're able to pay for it out of trading profits, then sure, it can certainly be a help. So, to sum it up, spotting the short-term positioning and flows imbalances offers edge for us. That's what matters. We can find and estimate both small and large potential moves before they happen. It doesn't mean we try to predict, but it means we have a higher probability of success because we look at something in more depth than just blindly saying, I'm going to buy this chart pattern or I'm going to sell this trend line. We're getting in and we're figuring out with real data what's going on with real people in the market. No opinions, none of this bullshit on Twitter. What are people actually doing with their money? I've personally found that keeping this analysis to under a 2-week time frame is the most accurate. Meaning, you don't want to try and estimate the positioning and flow of the market over a 1-year period. It gets quite difficult at that point because there's many external factors. To put it simply, it's easier to estimate what will happen in the next day as it will in the next month, right? If I had to tell you, say you weighed yourself this morning, and I had to tell you to guess your weight tomorrow, and then guess your weight 30 days from now, you would have more confidence in being able to accurately guess your exact weight tomorrow than you would in 30 days. The market is pretty similar. Whatever the data you have, whatever the analysis you have, whatever's going on in the world will affect the market over a shorter time frame, and it is simply easier to estimate what happens sooner than what happens later. That might sound contradictory to some people who think that short-term trading is impossible. You can't be a profitable day trader. You're out to lose. Yeah, most people are out to lose because they don't have the right knowledge and they're lazy. But you do have the right knowledge being here, and I know you're not lazy. I know you're going to be a hardworking, diligent trader. And so anyone who sits there on their high horse and tries to tell you what the price of Ethereum is going to be in 2026, that's all well and good, because by the time it actually comes to 2026, no one's even going to remember that bullshit prediction anyway. And that person's not going to make any money, but they managed to collect their clout and get their retweets on Twitter. We don't want that. We want to make money now, and this is how you make money now. So the logic that estimating what happens sooner than later is easier applies especially so to positioning and flow, because we're looking at imbalances, right? We're trying to find periods where the market is telling us one thing and price is telling us another. Like all the other lessons that we've shown, the most important thing to look for are divergences of some description. You want to find when somebody is wrong or some group of people are wrong so that you can take the other side of their trade and profit. Who does this benefit most? Scalpers, day traders, and swing traders all benefit from this knowledge. Because we are trying to time the market more precisely on those lower time frames, the positioning and flow matters most to us. Now, you could imagine a long-term investor who dollar cost averages into a position across a wider period of price action would be less concerned about exact entries. But us, anything under 4 weeks, so swing trading, day, or scalping, we're only interested in joining into a move once the market direction is set for the next big trend. We are not interested in buying something and having to hold, waiting for the trend to happen. Our job is to time the trend, or, in a range, to time the mean reversion. Now, there is a position, an interesting point I'll make, where it is important for position traders to know about this, but let's first look at a demo. So if you imagine the long-term investor in this scenario, we have price on the top. As price comes down into a low, the long-term investor will just buy. He will buy here, he will buy here, he will buy here. It probably dollar cost average, 20% of his stack, and he puts it in here and here and here and here and here. We're not interested in that because we don't want to sit for days or weeks or months in a market that's going nowhere. So what do? We use our positioning and flow analysis to get in at the right time. So we're watching a consolidating market, but what we're seeing, if we dive into our open interest, CVD for futures, CVD for spot, and our funding rate, all the factors that make up our P&F analysis, we can see some interesting developments. So all this time, while market was seemingly doing nothing and going sideways, if not slightly down, the open interest was rising. Now, you know from the open interest lessons that means new traders are entering the market. Open interest can only rise if new money comes in. And to go up, you need a long and a short. You need a contract to open. So new longs and shorts are entering this market, even as price goes sideways. That's interesting. That's something of note. We then look at what are the aggressors doing. So we're onto our CVD. We're onto our flows analysis now. We're looking at what is the aggressive side, the market orders, doing on spot versus futures. We can see here another interesting development, that CVD on futures, so the futures markets, the leverage exchanges, are pushing price down, or attempting to, because they're aggressively selling, whereas spot is actually more aggressively buying. So the spot market seems to be pushing us, trying to push us up. The futures market, the aggressors seem to be trying to push us down, but open interest is rising. That means whoever's pushing it down is entering new shorts, and they're being met with limit orders, so who they're selling into. The limit orders are also opening new longs because open interest is rising. So open interest up, CVD spot up, and CVD futures down. That gives us a really interesting move for a potential short squeeze. We then look at our funding rate, and we do notice that yes, funding was flipping from positive to negative quite a few times throughout this consolidation. Now, by itself, funding rate, as you know from the funding lesson, by itself, funding rate does not mean anything. It needs context. But we have context here because we have a whole analysis. And so how do we actually take this and trade it? Well, we look at, I took something very basic, a downtrend line, and once it was broken, so we consolidated for a lengthy period of time, we then broke a downtrend line, an indication that price wants to trend up. We then look back at our analysis and we see, yes, open interest is rising. Traders are getting positioned. So traders have been positioning and the market's going up. So OI up and price up, that's one sign of continuation. You want to go with the trend. You then look at the futures and see they were selling hard and there was negative funding. So they could be offside and short and be able to get squeezed. And if they get squeezed, that equals shorts closing, which is more buying pressure. We finally look at spot and we see, yes, spot have been buying this whole time on the aggressive side, which means again that we have some confluence for continuation. In this scenario, you would enter after this breakout. You would use your price action principles to get a lower time frame entry on it, but you would get in and ride a really strong uptrend. And instead of waiting days and days and days and weeks and weeks and weeks, you enter at the highest probability time when the path of least resistance is set and you know that there is a train leaving the station, that train is going up, and you can jump on. That's how we use positioning and flow analysis to actually make money in the markets. As I said, it's applicable on all time frames. And so even though I find it best for scalpers, day traders, and swing traders, even position traders need to be aware of this at a higher level. Remember 2020? COVID crash? How many people shorted the biggest bull run in history because of logic, right? Remember everyone saying, but the economy's shutting down. There's a deadly virus. There's going to be millions and millions of deaths. There's no way the markets could possibly go up. There's ships. They're stuck in the ocean. There's airplanes they can't fly. Everything's going to zero. That was logic. But if you had have looked at the positioning and flow, you would have seen that the markets were pointing only one way, and that was up. both from the Fed, who are actually printing and putting real money flow into the markets, as well as the open interest, CVD, order flow. All of that was bullish. But the coping bears, the mid-curve, they were shorting the biggest bull run in history. So, even as a high time frame investor, be aware of your positioning and flows. You always want to know which side of the move you should be on and which way the wind is blowing. So, regardless of time frame, I encourage you to delve deeper into positioning and flow, especially through the lessons on open interest, volume analysis, cumulative volume delta, funding rates, and order flow. You do not have to master them all. Pick parts of each, test them out on your time frame. You should already by now have a price action trading system. So you might trade market structure, you might trade certain types of patterns, reversals, momentum, mean reversion, trend following, whatever. Whatever way you do it. Wyckoff analysis, this works particularly well with Wyckoff analysis. You want to take whatever you've been doing and use this as a supplement to it. Positioning and flow is not to predict price. It's to find a high probability area and make it even stronger by knowing that the data is behind you if the market moves that way. So take that, add it to your system, back test it, forward test it, and you will see how much value positioning and flow brings to your life. Okay, lesson done. All good. So I think the stream is lagging to someone, but I guess I'm still live. Am I still live? Am I live? I'm live. I think I'm live. I better be live. Nobody's confirming that I'm live. Maybe I'm not live. I'm live. Okay, perfect. Now I'm going to get 100 messages because I know the chat lags from the actual time I speak. Yeah, as Nick says, only $50 a month for this. This is fucking years and years and thousands and thousands and thousands of dollars worth of fucking trial and error by me to figure this shit out. You get it all for just $50 a month. It is, if I had something like this when I started trading, it would have been fucking super G. Are you alive? I'm alive. The lags, anyway, the lags are fine because I screen recorded, so the actual lesson will be fine and will look G. Yeah, I have the latency set. I have the latency set to normal so that I get better stream quality, but it means the chat is slower. Yeah, so I prioritize the stream quality over the chat. Had my doubts, but now I'm definitely sure Jason Casper was your student. Who's Jason Casper? So, you know, I must be like someone who's trying to make a name for themselves online, are they? Stealing my stuff. Imitation is the highest form of flattery. And everything that everyone knows, I think Tatus says this, but everything that everyone knows was stolen from someone. You have a mentor. You have even just information you find online, books, parents, siblings, you know, your boss. Everyone steals. You should, constantly. I want you all to steal everything from me. Take all this stuff, because it's not about any one magic. If there was a magic formula for the markets, like I say, everyone would be rich. But of course there isn't. But you can get high probability data or analysis or ways to look at the world, and then find what works for you. Find what works for you. Definitely find what works for you, because, and this is why I teach all the, all these different type of concepts and techniques, and like more stuff than I could possibly ever use myself. I obviously don't use all these things every day. Positioning and flow, absolutely. Like, as you've seen from watching trading analysis, I'm always looking at open interest. When I'm trading actively, I'm always looking at CVD. I'm always looking at funding rates. But it's not enough to just look at them. It's like anything. The edge you will find is in how you apply it in different market contexts, right? Negative, and there's already a lesson on funding, by the way. I have a lesson on funding in Scalpers University, but there's going to be a new funding lesson because I'm updating all my lessons to make them 2023 as good as they can possibly be. But there's a really good funding lesson in Scalpers University. Funding rate is probably the most misused of all, right? The most misused of all, because people think negative funding equals short squeeze. It's not that simple. Funding gives zero credence to whether people are long or short. Funding only looks at the difference in price between spot and futures, discount or premium. Now, yes, you can interpret that if futures are significantly below spot and other factors are lining up that way, then it could be because there are a lot of shorts. But that doesn't mean short squeeze, because if shorts are going in heavy and the market's going down, then they're right. It's only when they become wrong that you can see a big move. But the new funding lesson will teach that in a much more concise manner than my previous one. See, Bear, welcome Bear. Bear in the house, and we have Nick in the house, and we have League Cargo. Got almost all my mods. It's really a miracle that we have you. That's very flattering. I consider every day how lucky we are. The amount of support we're getting is unreal. It is fucking pretty unreal. Yeah. I love doing it. But I don't know. There is nothing like this online, which is why we do what we do. We're trying to make something that doesn't exist anywhere else. Bear says, this is very streamlined lesson. Easily explains order flow. I remember being confused but still trying to tell other students what I knew up to a point using what you taught. Yeah, order flow as well is like, it's like everything. And this is why I'm redoing all my lessons too, because I'm better than I was 12 or 18 months ago when some of them were first filmed. I understand things better, or even, it's not about so much about understanding. Anyone here who has a skill that they can do, every one of you has something you are extremely good at. Let's say there's something you are well above average at, and you do it quite naturally. It can be difficult to teach it. Yeah.